So I would like to welcome the moderator for this session, which is Brewster Knowlton. Go ahead. So do you have?
Yeah, and I have with me Clay Yearsley of Texas Trust. Here, if you want to sneak on up, we can kind of take our seats. Harsh Tewari of CUNA Mutual. Matt Duke's going to step up of Cisco. Naveen Jain, First Tech, and then Ben Morales, a combination of QCash and Washington State employees. So I had a little bit of a kind of spiel here. This is a particular point of interest for me on really getting started with analytics. Who here thinks that they are a data-driven organization? Yeah, I'm seeing a few hands, but not many, right? As an industry, we're a little bit lower on that analytics maturity curve. To me, getting started, taking those right first steps, which is what we're going to talk about today, is crucial. And so again, I had this little spiel put together of some things that I thought, but the conversations from earlier today have been the perfect lead-in. So people are going to get some shout-outs here. So Mike Upton earlier today, 90-10 versus 10-90. How many of your analysts are actually doing analysis? Or are they just merging, manipulating, living and dying by their VLOOKUPs? Hopefully they put in false instead of true, right? That's a problem, because then that analysis gets pushed further and further and further up. How many of you have organizations where that VP and SVP level is so tactically and operationally driven that they're putting fires out day to day, they can't focus strategically on probably some of the things that we're talking about here? That presents a little bit of a challenge for us. Starting with a question has been something that's repeated constantly. Data is raw numbers. There is no value of data as itself. Without a question, by itself, it is utterly meaningless, which is probably what Chris's point is about a data warehouse. But if you can convert data into information, that's how you generate that value. That's how you make that warehouse worth it. So to me, that's how you can really drive that, and that's crucial. That all starts with asking a question. Who is it? Andrew, talking about unnecessary perfection. Minimum viable product, MVP. And then we heard, I believe it was John earlier, that said crawl, walk, run. Maybe your first warehouse, your first analytics platform, whatever you want to call it, maybe it's a Honda Accord. Nothing flashy. It's going to get you from point A to point B. Looks nice, great gas mileage, right? You're not going to complain about a Honda Accord. And then maybe eventually that turns into a Porsche. You can build it into that. And then maybe someday it becomes a Ferrari. Maybe not. Maybe it's still a Porsche. Maybe it's still a Honda Accord. It's still going to get the job done. Don't try to bite off too much at once. Getting started, and these guys are going to talk about that, requires the right first steps and being realistic about your goals. And then the last thing before I turn it over to these guys is Chris Surdek and I were having dinner last night with the First Tech team and all the other panelists and moderators. And he said something about TOGS, this framework. I'm like, TOGS, T-O-G-S. Technology, operations, governance, sponsorship. And what we were talking about was the technology in any of these implementations is rarely the hardest part. It's the latter three. In fact, it's probably the last, sponsorship, that presents some of the biggest challenges. A cultural organization, a cultural shift towards being data-driven is more challenging than any of the technical implementations that you're going to face. And I know, having had conversations with all of these guys, that they're going to echo some of those points. So I'll just kind of turn it over. We'll start with Ben, and his experience is going to be interesting because there's kind of the QCash side and the Washington State employee side. Talk to us a little bit about really how you guys started the analytics journey there.
No, I will. Thanks. You know, we really started this journey when the economic downturn happened, and when we took a look around and said, well, what's going to happen in the near future? The thing that came to mind was, boy, there's this thing called the CFPB that's going to be very data-driven. We better know before they know. So that was kind of one of the data points. The other was this digital transformation that's occurring with the consumer. So whether we like it or not, it's happening. And so we wanted to certainly be there when that transformation occurred. The other was around new revenue. Right, we needed to develop new revenue streams. We needed to figure out how do we create more margin. And when we put that all together, it really came to data was the way. And that became our journey. And then it became, the CEO created the birding platform that pulled the organization together and to make that the initiative through the downturn. And then as we came out of it, we are still working and we're still maturing, but we were able to pull the organization together and get rallied around that because we knew it ultimately created long-term relevance for us.
I have been with First Stack for about 3 years, and when I joined First Stack, it was a pretty new, I would say, management team. Greg was relatively new. A lot of people in ET were new. And they realized that there is a huge opportunity and also a potential challenge in certain ways. That if we don't use data, we are not able to deepen our relationship with our members. Our members have X products per member, and that X is relatively very small compared to what we see in the industry. Then what about the penetration that we have within our SACs? So we were basically focused on how can we really increase the engagement with our members, create newer ways to create that engagement, and then how can we have reach out to newer population, newer SAC population who is not really a member of First Stack. So we started with that. It has been a pretty interesting journey, and in phase 1, we focused more on the cost and operational efficiency, because this is typically the low-hanging fruit, where we automated and provided our analyst ability to automate a lot of different things. For example, I remember that when I came in, we had a 11.5-page Word document full of queries to find out how many new members joined the credit union last month. So as you can imagine, you cannot really have this type of information available available right away. It is mostly available after the month is over. It takes few days and all those things. We had analysts who were spending 80-90% of the time in bringing the data together from different data sources, which basically meant that they were doing the same thing again and again and again, and they were essentially had all these Excel and Access macros that they were really proud of. I had this person in consumer lending I was talking to, and I said, you know what, we have this Access database that I bring data from and all those things, and I provide all these reports on a weekly basis. And I said, what happens if you are not there in office for a week, like if you're on vacation or something? He said, you know what, in the last 5 years, I have never been on vacation. I said, come on. There has to be some time when, for whatever reason, meaning you were not there in office. And he said, you know what, I take some time out, even if I'm not in office, maybe an hour or so that I can run those macros and I'm able to produce my report on time. So the qualifying criteria for them was, am I able to produce that report in time? And I think that is a very big cultural shift, because we are not talking about how efficiently you can generate the report, but what is it something that you are able to use the data to drive the business. And I think that is a cultural shift that we are seeing. So in phase 2, we focused more on, okay, now that we have some insights, what can we really do with it? Because at the end of the day, if you have the data, but if you're not able to take action on it, how good is it, right? So that is where we focused on deploying some marketing automation tools, pretty successful implementation. And then in phase 3, we focused on building this data warehouse, and along with that, maturing our data governance process. And while we are working on this and seeing some initial success, we are taking the next step, which is on building some very specific analytical models to help the business find the value. And there have been few things that we have been looking at. You will probably hear about a couple of things tomorrow in the analytics model panel that we have. So, but that has been a journey for us so far. I think it is, of course, not an easy journey as such, but there has been a lot of learning. I won't say that everything that we did was right, but in hindsight, there were things. But the best part is that we were able to make some adjustments. And I think the key to me remains two things. One is the executive commitment. That is very important. And I think second thing is the passion, that the people that we have in our team, like most of the people over here that you see helping with this conference, actually, they are the reason why whatever we have done so far has worked at First Stack. And they're the reason why this actually conference is happening. because each one of them has really stepped up to do these type of things after their office hours. And I think I really thank them for all the hard work that they have put in.
So I'm Matt Duke. I lead data product development and data analytics within Cisco's Cloud Collaboration Technology Group. So a very different industry than the credit union business, but a lot of similarities as I've been listening. And for me today, we're really focused on how do you take data and transform your customer experience? So how do I make a more effortless experience, and how do I create moments of delight for my customers? And I think about that both in terms of external customers and internal customers. So that's kind of half of my charter. And the second half of my charter is driving the data-driven culture and data-driven decision-making, which really to me is around, as Chris talked about, how do we facilitate rapid experimentation and learning, and really valuing learning over maybe the ROI analysis up front to that, and really transforming the way that we provide access to first-line people to empower them to come up with their hypotheses, test those hypotheses, and create that either better experience for our customer or more effortless experience for our customer. That journey for us, and for me really, inside that business, and actually just one other point on that. So inside that business, that's things like Cisco WebEx, Cisco Spark. So we have tens of millions of active users, one of those 2% applications that Chris talked about. So that's kind of the domain that I come from. But that journey for me inside that business started, and actually the foundation of our current data analytics practice there really started 7 years ago with a pricing initiative that came, I think that was talked about earlier too. Of how do we optimize our pricing and extract more value and look for opportunities to simplify our portfolio, at the same time increase our profitability. And out of that, we actually hired some people from credit analysis. My first 2 hires came out of credit analysis and investment banking as we started building that. We partnered. In fact, I think Balaji from Decision Minds was with us early on in that 7 years ago, charting a course from really looking at a specific business problem at the time of optimizing pricing for our product portfolio, and then transforming that into how do we actually enable that better decision making inside the organization by becoming a trusted source of data. We were finding that we were having way too many arguments over the data and not what you're supposed to do because of the data. So one team would come in with, here's my set of numbers, another team would come in with another set of numbers, and really that was kind of the transformation point for us that took this from a project to something that now I think we have over probably 100 people full-time working in the data space within our technology group, really driving that down to not just solving business problems, but solving customer problems. And so our journey has really gone in, I think, kind of 4 big waves. First was finding a specific business problem to solve. Then was really becoming kind of the good housekeeping stamp of approval to data within the organization, so you could get a trusted, independent view to what was really happening, and then into business insights across the organization. And then ultimately, how do we actually not look at the lagging indicators of kind of the business results, but how do we get to the leading indicators of things like driving our customer adoption experiences, driving the experience that ultimately the users of our products have, and really making data central to that.
My name is Harsh Tiwari. And after my name, the first thing I tell people is, no, my parents did not hate me. Believe it or not, guys, I've been asked this question more than a few times. No, they did not hate me. My name is spelled as Harsh, but in India, in Hindi, it actually means joy. All right, that out of the way. I'm the Chief Data Officer for Kino Mutual. Been there for now just over 2 years. And before that, I spent about 17 years of my life doing various data things at Capital One, which is where arguably I grew up as a data analyst. this is a fantastic topic as we think about how you get started on data. Let me share on how I got started on data. Graduating graduating out of my MBA in my finance, Capital One hired me, and day one of my work, I show up and they said, okay, you're a data analyst. We have no idea what the hell a data analyst does. You're the first data analyst hired, go figure it out. Needless to say, I figured it out. That helped, but my most interesting learning was, you look at the portfolio risk. I was put to work on small business card portfolio, and within 30 days of booking a card, you could separate risk incrementally by a factor of 10. Pretty interesting insight, neat, I had an engineering background, so it looked really fascinating. It's like the best statisticians can do it, but after 30 days of data, I could do it. Felt really good. The application of that led to our small business card portfolio growing over $70 million of profit, from that year losing $12 million. Because what we said was, if we were to underwrite you for $5,000, I could now underwrite you for only 1,000, and when I can better separate risk, I can keep on rewarding the behavior and grow the portfolio. Much more effective, much more efficient growth, and oh, by the way, you earn the loyalty because people feel you are rewarding them. I did this all in Excel. So when I think about getting started on this notion of data, today, the world is different. There are lots of tools, there are lots of technologies. Arguably, all they do is make it easier for us to start. Because back in the day, you could not get data in Excel unless you had a back-end data warehouse, you knew Unix, you knew SQL, you could extract the data and then manipulate, do whatever your analysis was in Excel and eventually put it into PowerPoint. Today, Tableau, I see them over there, eliminates the need to do any and all of that. For their licensing cost, you can do instant analytics on every piece of data that exists in your organization. So it's really easy to start. We've covered a lot of concepts over here today, right? Experimenting, failing fast. My learning is, from an analytics perspective, if you think of your pie as 100% of data available, oh my God, I have all of that data. No more than 5 or 10% is useful for analytic insight purposes. So the key is, how do you get to that 10%? You can't get it through designing data warehouses. I think Gartner had the statistic a few years ago. Some 70% of data warehousing projects, after spending about $10 million in 2 years or so, fail. People stop it. Management has changed. The world has changed. Customers have changed. The products have changed. Bunch of things happen and the project stops. And the shame is, the problem statement of what you were originally wanting to solve for still stays. That hasn't changed. How do I more effectively understand and market and solve? So understanding where the problem is a really important part of the conversation, but equally important part of the conversation is being able to technically figure out what pieces of data are helpful in getting that problem solved. Where might it exist, and how do I get to it most efficiently? Now, technologies help these days massively, so it just sort of takes your cycle time and cuts it down massively compared to in the past. The other thing, I, having done now data over credit cards, auto finance, mortgage, risk management for 17, 18 years of my life, what I've learned is, building a model, coming up with insights are all really, really important things. But unless you focus on the last mile, where the actions happen, how do you get the actions to happen over there? My funny story, I'll divert just a little bit. My first ever piece of analysis that I did at Capital One, my then manager read through it. It was a half-an-hour presentation, very patiently listened, then picked up his copy, threw it in the dustbin. I was a week into my job. I was like, oh my God, what happened? He's like, you got all your analysis right. What you missed was systematically we force people to destroy data. The answer was, people had tried because they are not happy with their interest rates. When the business process said, if you get no reason, the call center people, if they put no reason for attrition, we docked their pay. And when there was a reason, it was a lesser. It was just one of the other experiments that we were doing. So there was all this fake data being entered where, just because somebody wanted to make sure they were optimizing for their compensation, they were subverting the data streams, and hence my insights coming out of absolutely correct database, done the right way, were absolutely worth sitting in the dustbin. Realizing some of these pitfalls, how the processes work, what is it that we do is an equal important part for these insights to work. And then at the end, when the person on the phone, when the teller, when somebody has to take a different action, you provide them not only what, but the context of why. Because they are the ones on the phone, they are the ones who has to take an angry customer if your answer is going to be, no, I decline. If your answer is going to be, no, I cannot. Because realize from a customer perspective, and we talked about this today, right? Instant gratification. I want the answer to be yes. Why do I need to wait? Why do I need to provide you all of these pieces of information? Unless this is all happening at the last mile, all of the insights, all of the models, everything is wasted. My last piece, perhaps, in terms of getting started, and this is, how I talk to my own executive committee and peers that sit over there. They talk about this notion of deep analytics, machine learning, and oftentimes appear confused on what is all this. Like, help us understand, what are you talking about? And what I tell them is, forget all of these terms, because yes, they can be confusing and they are confusing. Instead, let's focus on simple things. You see a report, CSAT is high. You feel good, you move on. Next time, don't. Stop. Ask, is it high for every customer? Is some customer higher CSAT and the other ones not? Which ones are higher and why? Can we trace it? Is it translating into profitability? Are the most satisfied members also the most profitable? If not, are we shooting ourselves in the foot looking at one piece of information, not correlating it to other pieces of information? Guys, these are reports that exist today in Excel. That's okay. Asking for de-averaging those metrics. Understanding where these are better, where these are worse. De-averaging, seeing who is performing better and talking to them, saying why, so you can get the average moving up, is a great way to get started and the executives to buy in, because at the end of the day, that is a very rational conversation that anybody can have without getting into the semantics of, do I have Datalware, do I have my BI tools. Business intelligence. The words are intended to get to the same concept of understanding where we are winning and creating more wins so that the averages move up.
Good afternoon. I'm Clay Earsley. I'm the Senior Vice President of Data Analytics at Texas Trust Credit Union. We, in December, ended the month at $1 billion in assets for the first time. And so that's a big deal for us, but I think it probably puts us in probably the lower stratum here among these organizations. 17 months ago, my boss came to me and said, hey, we want to start tackling this data thing. And so you've got 2 years to build a data warehouse, and you can't hire additional staff or move anybody over from another department, and you have X number of dollars, which sounded like a small number to me. And when you're done with this little project, you can move back into IT, where I'd been for 14 years. So that's what he said. What I heard, because I was about to turn 50, was that I had 2 years to turn this into a 15-year gig, and so that's my motivation, so that I can keep doing what I want to do. So we'll start there. How do you starting with a question? How do I take that those constraints and turn this into a 15-year gig? And so we had to work on that vision a little bit. But to start, you really just start. And that sounds simplistic and silly, but actually I say that all the time at work now. You need to commit a resource. Somebody's got to be in charge of this. It really is too big to be somebody's part-time job. And then I jumped in and started doing a data gap analysis. Just what information do we have? What systems do we have? Can we access that information? Is that tied up with a third party that I can't get my hands on? And really just do an inventory of that. Figure out where those gaps are, and then prioritize them and start trying to address them. And then, as Brewster talked about, and several people up here have today, the question is really the base unit for data analytics. You have to start with a question. So I'm ashamed to tell you that I built an Excel spreadsheet where I'm tracking all the questions that we come up with, and using that to prioritize the impact and the effort required to answer those questions. And then if you have to force your way in, you need a seat at the table with senior management. And that's not so that you can push your agenda, but it's so that you can capture those questions that they have. And then you can align the strategy. And so then I came up with a 3-year plan, and just trying to move that vision a little bit. There were, I think, 29 initiatives on there, and less than 10% of them had to do with a data warehouse. So I was trying to say, hey, there's more to this. Oh, and it only took, after he came to me, it only took 5 months to get me into that position. So I'm really, I didn't have to start the clock until a year ago. So, but he said, yeah, we'll make you the senior vice president of data warehouse. And I was like, that sounds like I'm going to drive a forklift. So, not that there's anything wrong with driving a forklift for a living, but tried to move him to something else. So we got to data analytics, and it is a bigger thing than just your data warehouse. And then set a goal to try to impact all levels of the organization, to try and build some momentum and have some people in my court so that I get to keep doing this. And then start using the data that you already have. We've touched on that earlier, but that ACH information is just a gold mine. Start using that. If you're lucky enough, like we are, to have all of your cards in-house, man, if you've got somebody that uses you as their PFI and you've got their ACH and card information, you know everything about them. I can put a map up there just like Waze can of where people have gone. So start using that. I had to do this, find some talent within the credit union that can be your ad hoc team, the people that you can lean on to do some of this analytics work. And those people, it might be that on the bowling team, you come back and somebody tells you, you've missed the last 3 times you've had the 5-pin up. Well, okay, she probably is analyzing stuff if they've tracked that, or the person that comes to you with a request for data constantly. Okay, well, maybe let's turn the tables there. That's somebody that we can use to our advantage. So you've got that talent within your organization. Start tapping into it, and then you're not alone in this. And that was one of the things I found out pretty early. there's Harsh at CUNA that can help you. There's all of these people lined around here that want to help you and want you to succeed in this endeavor. So, you know, there's a lot of strength in that. And then start challenging or reinforcing conventional wisdom. So, you know, we've talked about the CEO who just knows how things are. Well, let's just start asking some questions of that. So you can start with simple things like channel usage by generation. We think we all know how that stacks up, and maybe it does, but then maybe it doesn't. Or delinquency by engagement level. Are people that are members that are more loyal, more likely to pay back their loans on time? Those sorts of things. Is our bill pay users really sticky? And so when you start asking those questions, you may have business people come to you and say, well, that's obvious, we know those answers. Well, if it's so obvious, give me an hour and I'll go find the evidence for it right away. And then more times than not, it really wasn't all that obvious. But just start with challenging that. And that means you've got to suppress your ego a little bit because you can't go in thinking you know the answers, right? You just have to ask the questions and go where that leads you. And then finally, you don't have to spend multi-million dollars or $1 million. You know, you can start in low six figures and get this going. If that is the thing that's holding your credit union back, you know, spend $5,000, get a couple licenses for Tableau, hook it up to the spreadsheets you've already got, and you can do some pretty amazing analysis already. Okay, so it doesn't take a lot; it takes a little bit of commitment.
So thanks, guys. So one thing, has anybody read Jim Collins' book, Good to Great? Anybody? Okay. Remember him talking about the flywheel effect for those that have read it? So for those that haven't, what it essentially is imagine this big flywheel, 10 tons. And you try to push that thing. You try to move that, and its inertia's fighting you. Eventually, you keep pushing, it moves a centimeter, maybe then 2. Then it's a couple inches, then it's a foot. And then eventually this thing starts to spin on its own. And it develops that momentum, and it's almost self-propelling at that point. It's like riding a bike in 6th gear. Starting in 6th gear, those first few pedals make you feel like you just did an hour at the gym. But you get that thing going, and it's turning itself. What that really shows is the value of quick wins in building that momentum. So to each of you, how are you able to start generating that momentum within your organizations to get that buy-in? Because I know that having had conversations, there are some organizations where maybe you have some skeptical executives or people that might, be your peers. How do you help overcome that and get the quick wins and build that early momentum? Here,
So for us at WSECU, I think where we've got the biggest wins from is really our process improvement. When you tie the data analytics that you know about your members and the processes that we build in the back office and leverage that to really create efficiencies, it's like magic. Everyone wants to go see, how does that magic create? I want some of that magic. And so that's one aspect. The other is and I talked a little bit about it, is the monetization, right? And so we, through our development of our data analytics platform, have built a small dollar short-term credit lending platform that we had, basically using data analytics about our member, relationship-based underwriting, are able to deliver a loan in 6 clicks and 60 seconds. And we're like, wow, this is kind of cool. How about we commercialize it and continue to build on those analytics and foundation and create new revenue? So when you start seeing that happening and the revenue that it's driving, all of a sudden it becomes self-motivating that, boy, we're helping members and we're making money. So that continues to be a driver for us, and that's where QCash Financial comes in.
Yeah, I think in our case, we tried few things. So when we started, we actually did build a sales funnel. And I don't know if Sandy is here, but she really found it very interesting, because until she saw that funnel, she had no view into how many leads are coming in, how many are getting converted into opportunity, and all those things. And especially now that you are able to filter by how those leads are coming in, what channel, what product, what is the cross-sell and upsell, and all those things. And that basically became a very sticky thing. We took that funnel and we really used it in different business functions. Contact center wanted to have a similar thing. Retail wanted to have a similar thing. So having something, you will have to try. There is no rule to it, but you will have to try multiple things and see what is it something that really sticks. And once that thing sticks, how do you really start expanding on that? I think that is the key. Basically, you will have to try what is that thing that really makes your business user stick, and then you start expanding on that. I think that is how you start defining those quick wins, and that helps generate that momentum.
Yeah, I think, for me, when we first started down this, I brought in a couple people and the team came back and said, we have so much foundation work we need to do that it's going to take us like 9 to 12 months just to get data quality and data governance. And my message back to the team at that point in time was, okay, what I need you to do is the investment that we have, I need you to carve off 20% of that. And what I need you to do with 20% of it is you need to make it look like that's 50% of the investment with some really shiny, quick win stuff. And I will cover you for the other 80% so that we can get the foundation that we need for the long-term strategy. And so that was, we started with some things that were in my direct area of control at the time. I had a number of business operations functions, pricing, licensing, and we identified some quick wins that could really relate back to the business broadly. And we focused our 20% of the resource there. And then we started doing kind of the heavy lifting work to really set us up for the long-term flywheel. And then we went to, some of my peers and other kind of business functions that were good partners with me, right? And identified a couple key challenges that were low-hanging fruit where we could start showing value outside of just my specific area of business operations across the whole business. And so that was kind of a quarterly cadence at first of like, we have to have some good wins each quarter. And now we're at a point to that flywheel effect of literally I release to 3,000 people weekly releases of new data insights where we're like third tier KPIs in the organization. We started out at first tier KPIs. What are the things that we review as a general management team across the business? What are the things that if that KPI starts going wrong are likely the reasons, and start building out the second tier KPIs? What are the things that your first level teams tell you are the reasons why those things go wrong? Okay, let's build out those third level KPIs. And we just have a continuous backlog now across the organization where literally I have teams that are coming to me that I have 3 months worth of backlog of functional of my peers who are coming to me saying, hey, we need the kind of insights that you're providing in this other area, in our area, and we want to partner with you to do that. And I think that's the flywheel effect. But to that first thing, just start, right? It's like, what is a low-hanging fruit that people can see, but also understand that there is a lot of heavy lifting to get the long-term flywheel. And so you got to, balance a portfolio of some quick win stuff and some long-term investment.
Well,
I agree with you, and I think it is more like quick wins have to be in weeks and not in like quarters. Like if it is taking a quarter or so, then it is not really a quick win, right?
Yeah, I mean, absolutely. I think part of that too is just setting the expectation that not all things are going to work, right? Like, and it's the learning that's the important thing. If we can all agree that the outcome is important, it's really important for me to understand customer retention and be able to predict which of my customers are likely to leave. The first version of our predictive churn modeling didn't work. Like, it actually was really, really accurate and completely unactionable. And we learned a ton and we learned a ton out of that. And we actually learned that it was more important to be actionable than it was to be as predictive as possible. And so actually we ended up detuning the model and only focusing on things that teams could actually take action on. so that way you could tell somebody this customer is going to leave in the next 90 days, and here are the top 3 reasons why we think they're going to leave, and these are all things that you can do something about, right? Versus we know they're going to leave and you can't do anything about it. And so to that, like, yes, those quick steps are okay, but as long as you also focus on the outcome, a quick win can actually be a failure if the learning out of it gets you to the outcome too. So I think that's important.
I agree. I think there are no failures other than the failure to learn, right? Which, by definition, when you experiment, when you're trying to understand what's going on, when you're trying to decompose your averages, understanding kind of the first level, second level, third level set of KPIs, and how do you manage performance, by definition, you'll run across a whole lot of things that are not going to work. Right? In terms of, sometimes I feel this whole notion of quick wins, people associate it with also small dollars. Right? There's an implication over there sometimes, and that's the one thing I try and tell people is that's not necessarily true at all. In fact, if you look at across the entire financial services industry, there's been a lot of research that says versus a lot of other industries, for example, retail, the investment in data and analytics in the financial services is as high as any other industry segment, but the realization of benefit is significantly lacking. And in fact, BCG, I think, published a paper along with Morgan Stanley on this a few months ago that said the opportunity internally within banks and credit unions and insurers is between 5% of earnings or 3% of operating costs, depending upon which methodology you use, by just simply driving operating efficiencies. Like, if you do nothing else, anchor your investments on how can you eliminate manual work, how can you automate processes, reporting, insights, actions on them, and that itself is worth between 5% of your annual earnings or 3% of your total operating budget. Those are the estimates. So even these low-hanging fruits, if you do them and you do them well, the opportunity and the difference it makes to bottom line P&L sometimes is vast. And for me, our quickest win, by the way, if I can describe it, was very simple. On our chief investment officer was at a board meeting, and it happened to be a volatile trading day. And he was calling in to understand where kind of all the bond positions were. And the answer he got was, we don't update these but once a month. And literally right out of the conversation, he's like, okay, how can this be in this day and age when Yahoo can give me all the bond prices and track it for me? I can create my own portal that gives me all of this information. But we as an enterprise cannot answer that question. How is that acceptable? And that's what it took. So we automated all of them. Now they had 16 different reports. Now they have one single dashboard. Everybody works off of that. Everybody works, can track their own positions. The CIO can track his or her positions, can question any particular position and understand what's going on all in one shot. So not only did it take out kind of the operating cost out of the system, but it is giving the right information to the right person. But everybody has the information right then and there. So now the conversation no longer is, okay, you tell me what are your bond positions, and then end of the day, he, she, they comes. Next day you put in a trade because you want to change something. Right then and there, they can make the call on what bond to get out or what bond to get in, and the instant action is achieved. Finding those kinds of examples is not that hard in any organization. Spending time and building the trust and relationship where people will believe and want to do this. Because realize, for a lot of executives, right, oh my God, why would I not do this? This is really great. It saves me time, it saves me money, it gets me to decision. But realize, for a lot of people in the middle management to the front ranks, it is a visceral, existential threat, because my job as report writer, my job as and fill in the blanks on whatever it is that they do is now being threatened. So unless you overcome those objections, sometimes the short-term wins have a way of never showing up in bottom line dollars. They show up great on a PowerPoint slide as this is my measured ROI over the 2-month period, and then the ROI disappears over the long haul.
Oh, and Clay, before you hop in, how were you able to overcome those people that might have been a little bit more resistant? Because there is that, if you can automate 20 hours of my 40-hour work week, there is that threat of what do I do now? How'd you overcome that?
So what I found works is probably talking about, few different things. One is, there are no bad dogs. I wasn't there. I didn't make these calls. I don't understand the constraints they were in. The idea is, how do we make things better? So focus more on the future rather than critiquing the past. I have no business doing that. I should not be doing that. That's number one. Number two is, when people think about this, they make it very personal around, I'm going to lose my job. And frankly, in my 17, 18 years, we may have got a few positions. I can't say it was zero, but it was nowhere near, because what happens is, with the saved money, companies start investing more. Look, everybody wants to get to growth. A rising tide lifts all boats. And the reason you get there, the way you get there is not eat into your earnings, but create those efficiencies, continuous improvement that frees up dollars for more experimentation, innovation. As you do that, you develop the trust capital with people saying, look, this is not about eliminating jobs. This is about all of us working for an enterprise that is vibrant, that is growing, and in fact, minimizing the institutional risk. We talked about, how you think about risk. There is a risk in change. There is arguably sometimes a lot bigger risk in not changing. Anchoring people on those kinds of behaviors, I think, helps a lot.
I just wanted to add on that too, because it's something I'm really passionate about, of thinking about the internal first line employee like a customer too. It's how do you make their job awesome, right? How do you give them great tools to make them more efficient? Because they are your touch point to the customer. And their experience reflects on the customer experience, right? And so I think part of that is, like, when you approach it in partnership with that view of, like, we are here to make your life better, and through that, you're going to make our customers' life better. Like, I think that's part of that entire mindset, just gets people on the right footing.
Well, and we've heard, I can't tell you how many times today, the why. Right, I feel like everybody's watched Simon Sinek's video at this point, so of course it's a great thing to use. But if we can find that why for our internal users, who are our customers in the analytics space, that then drives their interactions with our members. So that path is, sorry, Clay, you keep getting passed over.
Sure. So we we did 3 things right away. The first one was I went to my boss and said, "Hey, what's some painful process that you do every month?" And then automated it. So, hey, there's some points in my favor right away. Yeah, that is a quick win. Yeah, and then take reports that we were already producing. So I came from IT, so we were producing a bunch of reports, and pick out the important ones, and instead of just sending the spreadsheet with the data in it, send some commentary along with that. What does this tell us? What did this look like 3 months ago, 6 months ago, 3 years ago? And start building that commentary up, and send that out to more people than just your executive management team, because you'll start getting feedback from other places. And then do some simple analysis of your membership, because you're going to find some things that are surprising, I guarantee you. So the one that I talked to somebody about earlier today was we were trying to see who uses what channels. And the really weird thing that we found was that we had members that would use this to take a picture of their check and make a deposit, and then would turn around and dial into our audio response unit to find out what their balance is. Now, that's not rational behavior. So I don't know that we understand our members better, but we do know what they're doing. And if you start providing that sort of information, then people are just going to start asking you questions and doing your job for you to start finding things to analyze.
So we've got about 10 minutes left, and I want to at least put some questions out to you guys and allow you to ask them some questions that you want to ask about this, getting started with this journey. So if there's, coming over to you.
Yeah, I'm curious. We're just getting started in the whole process, and your predictive model. What are the top, like, 3 attributes that you use to determine if a member is going to leave? Is it like ACH decline, usage, or? So I'm just curious as to what you look for to find that out.
That one that we're doing is we list out all of our members that have essentially just a savings and one other product, and that product is time sensitive. So it might be a certificate. It's probably with us an indirect loan, but something that's got that time frame, and then just report on those. What's the nearest maturity on that thing? Well, there you go. That's somebody that's in danger of leaving when that product has run its course.
I think what we've found is the deposit activity starts to decline. That's our number one indicator, is that the cash flow is very traceable. So it's the number one predictor.
Anybody else? Gonna make me keep digging into my own bag of questions here. All right, so I'll throw this one out. I've had a number of conversations where people have said, we're not ready to start down this path with analytics because we have some data quality issues, right? I know. So how do you overcome probably the inevitable problem that's always going to exist of those data quality issues, and how do you address them and continue to manage them going forward?
Yeah, it's a continuous improvement thing. I mean, data quality is something that we're challenged with from the beginning, and as data evolves and we start to mature that program, it'll get better over time. But it's just something you've got to be able to work closely with your internal customers to try to understand what it is that they're trying to solve, and help them tell you what is it that they think is wrong, and then start working with them. And then, you'll start to perfect it over time, but it's a continuous improvement that you just got to build in. It's usually, I find, people start focusing on the data quality when they really just haven't bought in yet. And so then that's a different discussion.
And I think in our case, it is not like data quality issues don't exist, but it is more about scoping the problem. That don't try to boil the ocean, because there will be a lot of data quality issues, integrity issues, and all those things. But find the business problem and try to solve the data quality issues for that specific problem. Once you are able to do that, then you can start building on top of it. So don't try to boil the ocean, do a pinball approach, find a solution. Once you solve it, then go to the next set of pins and so on.
I think there are 2 kind of lenses I have on this. One is, data quality often also gets caught up with just data governance and data definitions. 2 people calling the same thing, but calculating it differently, right? And so I think that's part of it, and being able to identify that and really be able to drive to, there are a set of metrics that we use, and we have a process for defining those throughout the organization, and really making sure that, there is a source of truth to what something means, right? And so just like the business glossary stuff that often gets overlooked is super, super important, I find. And then the other thing is, like, data quality stuff just, always creeps in from somewhere, some change. I get millions and tens of millions of points of telemetry from product clients and all this stuff. Some engineer changes some piece of code. My general rule is we just never make the same mistake twice. So, like, if we have a data issue, then I want to know that, okay, we've gone and we've written test scripts to test for that thing. We're going to have anomaly detection on it, and it's a little bit of whack-a-mole, right? But, at least that way I know, that's my expectation of the team of, yeah, this stuff will creep in. We should always find it first. That's my first expectation as the data team. You got to have pride in what you do, right? It's really got to hurt you in the gut when somebody else finds something that's wrong with your data, right? And then, it will happen, and we just make sure we don't make that same mistake twice.
Yeah, You know, data management and governance is a really tricky topic. I've seen sort of armies of people employed on this topic and people looking to do everything. My struggle, and oftentimes my advice on the topic of data management is first figure out what you're going to do with it. How does it matter? And then figure out whether you even want to think about managing this or not. Because like I said, like 80-90% of the data that sits in the system is not really going to be useful from an analytics perspective. It is needed to post transactions in the system. Great, it's a timing thing, you don't need to worry about. But where you do need to worry about, and you know, you make the point on definitions. At one point in the bank when we were doing, I think we defined losses in 4 different ways. And the reason we defined it is we were sitting evaluating 2 presentations from 2 analysts. One that suggested, you know, his losses were going to peak out at 8%, the other one at 10%. And yet the NPVs on the 10% loss were way higher. So we were all kind of struggling, you know, which one do you pick? And it turns out one person was using gross unadjusted losses, the other person was using net adjusted losses. Both of them were calling it losses, both of them financially absolutely true, they are losses, but that's when we got that is where in data management governance world, precision starts mattering, the words start mattering. That is where it makes sense to understand how, where, what. In a lot of data, it's not going to matter, so don't spend the time on that. Understand how you use the data and then get to where the quality, what the quality, how do I measure it, so on and so forth.
Well, and for all of you here, go back wherever home is, Thursday, Friday, and ask 6 different departments how many members you have. If I didn't get that reaction, something would be wrong, right? If I ask, I've had it to the point where you asked 6 different departments. I once got 7 different answers because one department didn't agree. I got 2 answers. So addressing that is pretty crucial. So Clay, I just wanted to make that point before skipping over you once again.
I also think that's one of the.
Matt skips over you.
Yeah, sorry. I also think that's one of the places that you draw support from, though. When we talked about getting executive buy-in, like you can't actually make good database decisions if you're not talking the same language, and that's something that's a real easy conversation. I think that resonates.
Yeah.
Yeah, I think being really specific on the language that you use when you're talking to your customers. And then I don't let other people say how many members we have. That is something that I send out on the 1st of every month and say, this is the number, and just not leave any room for discussion there. But then that's why I started doing the account count instead of the member count, because we can argue about that all day.
So that's an interesting point that you bring up right there, where you send the number out, and we've 2 minutes, so I'll kind of make this quick. How did you decide on, and this is for all of you, the way that you structured your analytics area in terms of there's this idea that it's centrally managed, broadly distributed? Are you the one that's telling them this is the answer? Or are you responsible for simply providing them the platform, they go and find the. Is it more of a centralized or decentralized model? And of course, that's a terrible question to ask with just 2 minutes remaining. But I do want at least to throw that out because you brought up a good point with that.
We're decentralized. We really focused on how are we going to make this live forever? And that really requires the business lines to own it and to buy into it. So the IT group owns the data side and making sure that the quality's there, it balances, and then it feeds into the A&I team. And I think ultimately that's how you bring in the whole organization involved in it.
And I think we kind of call it a little bit of a hybrid model, where there is a COE, Center of Excellence, and then that is what I represent, right? And then we have analysts in each of the business functions. They are responsible for really working closely with the business leaders, but we are also responsible for enabling that the whole organization as a whole gets that lift that we are looking for from the investment.
Yeah, we're a hybrid as well. We actually sit like product management in a software company is the business, right? And so my core data team, which is probably about a third of the people that totally work on data, they do data strategy, data analysis, data science. They actually sit in the business. And then we have functions around that where I have contributing members, and so we run as a center of excellence where I'm about 50% kind of top-down general manager funded and about 50% funded by the surrounding teams like our online business, our tech support business, our sales organization, so that we keep a really strong balance to thinking about them as customers and really addressing the internal needs while we're also thinking about our external customers' needs.
Yes, the only thing I might add to that is
Harsh.
this is where I found sort of crowdsourcing is really, really helpful, because at a top-down level, there's a whole lot of people that can and should define specific metrics. But the difference comes is the person who's generating the report and oftentimes figuring out the metrics has their own definition that they've been reporting for years, and oftentimes may or may not be aligned with how an executive chooses to define the exact same metric. So getting all the different versions, so you can then once and for all put the debate and say, and sometimes it's not even that you have to get everybody to agree on one definition. My standard to that is literally much more simple, which is one term will have a single definition. You can keep on putting as many terms as you want on it, gross, net, adjusted, unadjusted, people losses, dollar losses, pick your number, have as many variations as you want. But when you say gross unadjusted dollar losses, it's going to mean one exact thing across the board. And that helps getting the decisions then right and not miss it.
We finally have a question.
This the question here is Naveen and Harsh are probably familiar with what happened in the Indian market, where a bunch of physical cash got sucked out of the market. And now all of a sudden the ATM and the branch is used in a different way. So a question to you guys and then to all of you is, what can you do to prepare for the unknown? As in this case, this is, how do you predict with data that you do not even have? How can you predict for the future? What are you doing for perhaps a cashless type or a cashless society in the future?
So if the question is both from sort of a credit union industry perspective, but even arguably broader from an industry perspective, how do you get all of this done? So my view is, there's one way to think about creating scale in the data, which is arguably a lot of what people are doing today. Buying data from third-party providers and mixing it with internal data sets to create a lot more value on behalf of the customers than just looking at your own particular data. The easy example is, it's easy to come up with a next marketing product based on what you know. It's far better if you actually can get their bureau information and say, you pay $400 for a mortgage. If you refinance with me, I can make you only pay $350. Personalization, we talked about the concept earlier today. The notion of personalization means you have to grow beyond what your proprietary data sets are. And not only that, you have to experiment, not just for the sake of experimenting, but building your proprietary data set. So that's kind of one part of the answer. Specifically in the credit union segment, my view is, look, the movement is in a best space. It has been fantastic growth. We heard some of those numbers. Really, people are not happy with the big banks, looking for options, looking for alternatives. The only way you actually exploit that opportunity is to start using and competing and creating, kind of taking away all the strategic disadvantages. Us from a CUNA Mutual perspective genuinely believe and are committed to the system. So right now we're piloting with a few credit unions, how can we help them get to data and analytics faster? So we were investing along with them to figuring out what their use cases are, how can we help deploy them in a way that says we will share at some point. I mean, right now these are just pilots. Our view is, look, we want to do anything and everything to help credit unions develop this. Instead of 5,000 different credit unions individually developing, spending on data warehouse, data scientists, data engineers, what have you, what can we, CUNA Mutual, do and bring to the table that allows the entire system to start using? Because then you go on an even footing with the large banks that are spending hundreds of millions of dollars, which arguably not any one single credit union, even CUNA Mutual by itself could not. But together the system is big enough to actually get to that space.
All right. I think This
I would-
blinking. Oh, all right. We'll do, and then I'll tell the blinking red circle that I got to stop. That we'll keep going.
Yeah, the red pie is really
Yeah, it's yelling at
intimidating,
us.
I must say.
4 minutes and
so
56 seconds.
I would just say that to address the unknown, spend some money on your SAN, make it as big as possible, and stop making decisions about which data to keep and which to get rid of, and just save all of it, because you never know when it might become important. And yeah, we may only use 10% of it, but that 10% may shift.
I just coming out of the tech side, I have to just comment that to the question of like, how do I see the future disruption? The future's already here. It's just not evenly distributed, right? And so the quicker that we can understand the pockets, you saw some of the earlier speakers, right? You heard about do, then learn, right? The quicker you can iterate the loop of understanding what's changing, how do you react to that, test your hypothesis, learn from it, and do that cycle again. Ultimately, that's the core foundation in tech of what we believe makes us win, is how quickly can you iterate your learning cycle, right? And so I think how do I predict the next disruption? I don't. I'm just continually watching for it and trying to emulate things that look interesting and test it and see if it works.
Well, and to end on a cliche, I think Clay pretty much said this: to begin. So get started. There's been some great ideas thrown around, and a lot of things that don't require that big investment to start making those quick wins, start generating that momentum, turning that flywheel, and starting to develop your own analytics capabilities and competencies. So thanks to these guys for sitting up here, and sorry for taking 6.5 minutes extra.
All right. Thank you, Brewster. Thank you, panelists, and the audience for the questions. So I think we'll just quickly get started with the next session. Briefly, I would like to call upon Bruce Davis from Alteryx to give a quick fire introduction about Alteryx.
Thank you. Thank you. Good afternoon, and thanks for your attention briefly. My name is Bruce Davis. Can you hear me okay? Bruce Davis with Alteryx, and this is Mr. Corey Hill.
Hello, everyone.
And just a little bit about Alteryx. Has everyone heard of Alteryx? Anyone know us? I know there are a couple users in the audience. Thank you. We are the leader, one of the leaders of self-service data analytics. So when you have a chance, please come over, and Corey or I will give you a brief demonstration of Alteryx. Very, very cool technology. I've been in the software business since Eisenhower was in office, and this is awesome, awesome stuff. It truly is. So who said it early? Was it Mike Upton who made the comment of 90-10, the 90-10 paradigm? We, at 90% of the time, analysts spend their time finding the data, blending the data, mashing the data, throwing the stuff out you don't need. That's kind of what we do. We're the data prep, data blending platform people. We do other things. We do predictive. We are a great partner with Tableau. We feed directly into Tableau. So come over and spend time with Tableau and Alteryx. But do you mind if I tell you one quick story? Just one quick one? I got time, maybe? I was at Tableau's TC16 in Austin. It's their tech conference, and there's about 15,000 customers down there. And we had a happy hour. And this lady I had never seen before came up and gave me a hug. And she was a customer. She signed up and bought Alteryx about 2 months prior. And she said, "You don't know me, and I'm married too, but I want you to know that you saved me, using Alteryx, you saved me 20 hours a week." So this is pretty cool stuff. So when you get a chance, come on by. Thank you all.